Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, and regulatory landscape and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon, we have Russell Rhoads, Associate Clinical Professor of Finance at Indiana University, and Dan Deming, Managing Partner at KKM Financial, to discuss why flat VIX term structure indicates a wait-and-see attitude the market is taking around policy and tariff execution. It is great to see the both of you guys, as always. Welcome back to Trade Talks. And Russell, this is interesting, the way that you're viewing term structure, because it is a little bit different than what we've seen for a good amount of time.
Yeah, and it's what we're seeing right now. If all the futures are at a discount to the spot index by a couple of points, but then all the futures between March and August, based on ticking here, everything's got a 19 handle. In fact, they're all within about 35, 40 cents of each other. That's a flat term structure. And typically, I've always defined if the futures are within a point range, that were flat. So that's right. Flatter than flat in my mind. And I've always equated that with just a lot of uncertainty within the market. And I think we got a lot of uncertainty going on right now. We have a president that says an awful lot of things, but we're not actually sure which of the things he says are actually going to be acted upon. So how do you trade the market around that? And that's where we're at right now. We're just at an inflection point, and I don't even want to try to guess what direction we're going to go.
And Dan, that's something that we're seeing consistent across all asset classes. And which makes me a little bit nervous, because when you see everyone thinking the same way, especially when the VIX term structure looks as flat as it does, is that a contrarian call, or are we actually in agreement here that the path forward is truly uncertain?
Well, right now, the probability of, a high vol event has been spread across the entire curve. As Russell pointed out, when you see the market flatten out like this in the futures construct, particularly with the VIX cash over 20 and that front month future not in backwardation to the rest of the term structure in the futures market, meaning that front month future higher than the rest of the futures markets, because usually that's when you get the probability of a risk event pushed towards the front end of the curve. And we're just not seeing that unfold at this point. So as you pointed out, yeah, there's uncertainty across several months here as far as where this is going to head, and also the possibility that you're seeing it also unfold in other asset classes, as we're seeing some extremes, but yet the market has not necessarily broken down. And I think that's the key right here, Jill, is the fact that we're still in the range for 2025, even though we've experienced some selling pressure over the last couple of days.
Mm-hmm. And Russell, from an anecdotal perspective, what are you hearing from market participants in terms of how they're viewing the volatility in the U.S. markets?
Sure. So yeah, and I got a view from Europe. I was at I was at the Eurex conference, one of your, not a direct competitor. So much like the old Johnny Carson, I will not just say another network. I'll say which one I was at.
It's totally fine.
And we were doing a panel on volatility where VIX was spoken of as much as V stocks. And I was the moderator, so I got to come up with a question. And my question was, are we in a high, low, or mid-range volatility environment? We always like to say we're in a high volatility environment or a low volatility regime. And I got one person saying low and nobody saying high. And the whole room said mid. And I said, all right. And it was kind of cool because I can make the rules as the moderator. I said, are we in mid and getting ready to go high, or mid and getting ready to go low? Nobody thought we were going low. There was just this consensus in the room that volatility is and where I would say VIX around in the 20s, that's definitely a high volatility regime. And the feeling among the professionals in the room, and these people had shown up for a volatility panel, so they're definitely focused on that area of the market. They just feel like we're going to be in a high volatility regime for some time. When Dan was just talking about the flat term structure and how the front month is not necessarily at a premium where we think the move might happen now, we're not sure when. I keep thinking it's not if, it's when are we going to get that volatility event, and probably before any of the active futures are off the board in my mind.
Yeah, which is interesting because, Dan, sometimes when everyone is thinking the exact same way, you want to be a little bit contrarian, but I think it's really tough to expect that volatility will not be part of the longer term picture, at least for 2025, until we get some clarity. I mean, we're 6 weeks, a little bit more of that into the administration. It feels even longer than the first 100 days.
Well, yeah, and I think that is why you're seeing the pricing structure as it is currently, because of the fact that we're seeing again, the VIX holding here at 20, above 20 now. And from a historical perspective, the mean, or I mean, the average, I don't want to use the word mean, but, it's usually more closer to 18. But of course, you got a huge couple of huge vol events that actually price in that 18. So it's actually a little bit below 18 from a historical standpoint. So we are in an elevated vol regime. And you're seeing downside puts in the SPX firming up over the last few weeks as the market's giving up some ground. But again, we're still in this range. And I think that's the key factor right now when you look at the SPX is the fact that we're still in the range for 2025. We have not taken out the lows, which come in, around 57.73 in the SPX. And as long as we remain in this range, then, we're going to see some demand, but not outsized demand. And that futures curve is flat because, again, it does expect that there's going to be continued volatility over the next several months. But at this point, it's uncertain as to when that's going to occur. And that's why I think, again, a very flat curve is historically, when you see these selling pressures and you see, again, the VIX get over 20, that front month future, if not the front 2 month futures, usually go in the backwardation because, again, that vol event's been pushed to the front and it's basically being priced in across the entire term structure, which to Russell's point is basically the expectation is there will be a vol event, if not more, one or two or three more throughout the first 6 months of this year.
So Russell, when you think about it from a strategic perspective, is there anything that's showing up in flows or notable trades that mimic what you're seeing in terms of the term structure, or is anyone putting on anything that's of note of size to discern a direction or the other, or just this flat wait and see?
There's this flat wait and see, but one thing that stood, I'm going to argue both sides of this and turn into an economist here. We've got a high VVIX right now, which is the vol of vol. Typically, I think if it's over 100, that we consider that a pretty high level. And VIX is driven by the puts. VVIX is driven by VIX calls. And so even though we haven't gotten quite the volatility event, and even with VIX at elevated levels, we're seeing higher implied volatility than average for out of the money VIX call options. But what's really interesting is we've gotten these spikes up in volatility and they've come down periodically over the past few months. And when we do see VIX up on a day like today, I'll go take a look at the flows, and I'm not seeing a whole lot of bearish flows for VIX.
Not a ton.
Like we normally have. I mean, some, but I mean, it wasn't really hard to find bearish on VIX, bullish on the stock market trades on days like this. And today it was a little bit more difficult when I was digging through the tapes. I don't know if people
there's been a couple of prints in the last hour, Russell. I was kind of keeping an eye on that too, because you're right. I mean, that's the first place you should look to see, where is the activity. And it does look like, there is definitely pretty sizable open interest in the out of the money calls in both March and April as we go into these two cycles. But today it does look like March 20s are trading a fair amount, as well as the April 20s and March 23s are very active here in the last hour. So as the market's sold off today, there is a little bit more action in out of the money call activity as we see the selling pressure pick up here as we move through the session.
All right. Appreciate the insight. As always, thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.